Welcome to your weekly market update. We are seeing interest rates slightly elevated week over week, but near unchanged levels. The rise in interest rate has been due to our government continuing to print ridiculous amounts of money. I'll get to that in a second. If you would like to see the charts, I will share them with you. As you can see, we're experts in this trading. Remember, on this chart, the higher these are called Japanese candlesticks. They represent 1 day of trading. The higher they are on this chart, the better the interest rate. So you can see we locked our clients here before this big deterioration. That was a huge save from several of these days. And then we've been locking ever since. We will watch this support closely. We do have another floor forming right here, which should be support. So we want to see mortgage bonds work back up to this level. Here's the thing. They're not going to, if we keep printing $127 billion in Treasury bonds, the bond market, Treasury bonds, which is the government printing money, and mortgage bonds, which are the mortgages done in our country, those compete for investment dollars. So when a massive amount of bonds come to the market, some people are going to go over to there because the government's trying to entice the absorption of those bonds with higher yields, meaning they're paying a higher interest rate to print the money. So very troubling to see 127 billion in 2-year and 5-year bonds come to auction. Oh, by the way, they're printing another 42 billion today. So just this massive money going out. I'll keep my political comments about it to the side and keep it to how it affects finances. It continues to keep inflation high when all the other signs in our economy is saying that it should come low. So our government's not doing us any favors right now to see interest rates come down. The good news is we still believe in housing, and the year-end 2023 numbers are trickling in. Remember, we said 7% appreciation. Case-Shiller came in at 5.6. That factors in cash offers. And when cash offers are presented, a lot of times they'll get a little bit better a deal. So the price of the home won't be sold as high. So Case-Shiller factors in that. FHFA, which is conventional loans, came in at 6.6, so very near our predictions for the year. Those are conventional loans. My favorite service has not came in yet, Black Knight. That it was at 7.2, so near around where we thought appreciation would be. We're predicting another 7% this year, and we're seeing just continued increase in home prices due to lack of inventory. So these are very encouraging signs that appreciation continues to happen. If you're a homeowner, you are loving this. Your home values keep going up. If you're trying to get into a move up home, this is probably hurting you a little bit. But we believe that this trend will continue for 5 to 7 years and be exacerbated and amplified when interest rates do go down. So we still believe April, May is when we're going to start seeing some lower inflation reports. But this money being printed by the government certainly throws a wrench in some of those predictions. We'll see if they keep doing it. Thank you for tuning in. If we do have a new program that you need to be aware of, it's called our Cash Plus program. What it does is it guarantees that to the seller that cross-country mortgage will pay cash for the property on the 21st day. So if you don't perform on the loan, we'll step in, we'll pay cash. It allows you to compete with cash offers, and then we'll finish the loan with you after the fact and then just transfer the deed to you. So great program. We would just have to run your loan through underwriting. If you would like to do that, send us an email, chad@thelubin group, or call our office 312-731-4939.